The most dangerous trap in crypto is starting to show itself, but it's not what you think. In fact, it's this trap that causes more investors in crypto bull markets to lose money than anything else. And if you can avoid it, which I'm going to tell you about how to do in this video, then you have a very good chance of making some significant gains during this bull market. I'm also going to tell you in this video why the sentiment is shifting in the markets right now and why we are moving towards some very exciting times, and there's various signals flashing to show it. So do me a favor, hit that like button. Let's get into today's video. Now guys, unlike usual, I'm not going to leave you hanging on to the very end of this video to find out the one thing that you want to know. What is this crypto trap and how do I avoid it? Well, I told you it's not what you think because many people have been telling you about bull traps and bear traps, and it's all very scary and worrying or exciting, whatever it is. But this trap is actually one that's going to be affecting you slightly later on than it is right now, but I want to tell you about it right now because you need to be logical and thinking calmly rather than overly emotional. Because as this bull market heats up, and it will, you will start to feel more and more emotional and more like things are going to go bigger and bigger and bigger and we're going to make tons and tons of money. The most dangerous crypto trap out there is none other than the super cycle theory. Now, in the last few bull markets, I've heard this come out time and time again. I've heard that this time is different, that Bitcoin would not have another bear market and will just continue bullish towards the upside. This is based on various news articles and stories out there about Bitcoin's strategic reserves, about banks buying Bitcoin and no longer having any value in the dollar, and all these other great and exciting stories. But one thing you probably realize more recently is that despite all of the bullish sentiment around Donald Trump buying Ethereum and Bitcoin and all these other coins and signing off on strategic reserves, and the fact that the banks are in fact now buying Bitcoin and crypto, you've noticed that the price has done nothing. Okay, ever since Donald Trump got into office, we have not really seen anything apart from, if anything, downside moves in Bitcoin, which should tell you that all of these positive pieces of news or negative pieces of news really don't shake the price of crypto that much at all. They are maybe supportive and beneficial to the crypto market, yes, but they are not having an impact because fundamentally the bull markets and crypto bull markets and bear markets are driven simply by liquidity, not just from the US, but from other countries around the world. In fact, back in 2017, it was all driven by China. Therefore, the super cycle theory that everyone likes to tell you, where we don't really see much of a bear market for Bitcoin, and in fact we roll over into another bull market, is just BS. Because the stories they're telling you that are going to support the super cycle theory are all based off the stuff that we've seen has no impact on the crypto prices. And because markets are driven by quantitative tightening and quantitative easing, all basically fundamentally around the US, because the US has the dollar and the global currency is the dollar, and all other banks around the world have to play the game against the dollar, it means that we go through quantitative tightening, quantitative easing, which means that we have 3 years of bull market followed by 1 year of bear market, which means that if you get caught in the trap of thinking that there's going to be a super cycle, then you end up round tripping. And everyone will round trip who thinks that there's going to be a super cycle, and it's very painful. Ask Murad, who thought that there was going to be a super cycle in his meme coins, and this is his meme coin list right now. Now, why I wanted to tell you this right now, rather than when things get pumped up and really exciting, is because of various things. The algorithm on YouTube and Twitter, and because of your own confirmation bias. As the market heats up once more, you're going to switch from feeling a little bit bearish, which you probably are right now, into feeling incredibly bullish. You're going to start to make some money and you're going to be like, this is pretty good. And you're going to continue to think that this is good, and you want to find evidence that's going to support the fact that you're going to make more and more money. So you're going to go out there, you're going to start searching for content that's going to tell you Bitcoin price prediction and all these other things. And guess what? The algorithm is going to drive the stuff towards you that makes you feel all good and warm on the inside, when really that's not what you need, because that warm and fuzzy stuff is going to end up making you a round tripper. Okay, seen it in the last bull market. We will start to see it again coming out more and more as the bull market moves on, and it will very shortly. You're going to see more and more people talking about this super cycle theory. Now, why is the super cycle theory so dangerous? And what is this round tripping stuff all about? Well, from the top of the last bull market to the next bear market, Bitcoin went down 75%. I guarantee that no one out there who's telling you that they're just holding Bitcoin forever is really doing that. Many of them are selling somewhere near the top and then just waiting to get in lower, which is pretty much the most sensible thing to do, in my opinion. Because if you just held from the last bull market, Bitcoin, for example, until now, you would be up around 41%. But let's say you had $1,000 in Bitcoin from around this price and you sold somewhere around here. You now have $6,000. Now, if you'd kept your $6,000 in, you could have made another 40%, which is what, $2,400. You could now have $8,400. But if you sold the top and you waited and you bought in somewhere down here with your $6,000, you could have made another 5.5x on your $6,000, which means you're now sat on for $8,000. So it makes sense that you should try and sell somewhere near the top and then try and get back in again. The super cycle theory will come out and it will make you think that maybe I should just hold, maybe I should just keep in this market. Guys, when Bitcoin came down that much, guess what? Altcoins, some of the top performing altcoins of the last bull market, Solana, went from $256 down to $8. People lost nearly 96% in Solana. If Bitcoin comes down that hard, I mean, we've seen Bitcoin going sideways and many altcoins have fallen 70%. Okay, if Bitcoin comes down that hard, a lot of altcoins will go near enough to zero. It's a sad fact. Okay, but this bull market will be a big one and it'll be followed by a big bear market because these bull markets are not fundamentally driven by what Michael Saylor's saying. Okay, they are fundamentally driven by QE and QT. Quantitative easing, quantitative tightening. And while, yes, in the last bear market, you could say, well, FTX caused the crash or Luna caused the crashes only happened on those coins because the value of everything around them fell, okay, and then they found themselves in a sticky situation. I guarantee pretty much that if Bitcoin hadn't fallen under about 30K, then FTX probably would never have gone under. And SBF would still probably be running FTX, and it would be running like Binance or another one like that. Shady stuff like that only got exposed because the market came down because of quantitative tightening. Okay, so no matter what you get led to believe, quantitative tightening will happen again. Why does QE happen and quantitative tightening happen? Well, if you have QE going all the time, then guess what? Everyone gets even more risky. Everyone starts to make bigger and bigger bets. Eventually, markets become unstable, they become all floppy, and lots of people have made lots of money, which eventually means that they will start to take profits. When they start to take profits, markets can collapse. So to avoid major market collapses, like we do see in crypto, in the stock market and everything else, you have to bring in some form of quantitative tightening to calm people down. So this allows for economy to grow during QE, and then they bring in quantitative tightening to calm everything down. Okay, now, why do I think things are starting to shift in the markets right now? Well, because of this. Bitcoin has been doing not a lot over the last couple of months. It feels very painful, this crypto bull market we've been in, because maybe we're overexposed to altcoins, which is, again, why you need to sell somewhere near the top and not get bought into this super cycle theory that your coins are going to go forever. So in my opinion, if you're new to crypto and this is your first bull market, your aim should be to turn that $1,000 into $6,000 to $10,000. Makes sense? So that somewhere down here with your $10,000, you could buy in another $10,000 down here and turn it into a 50 to 100 grand. It's easy to make a 10x from down here, not just in Bitcoin, but in other altcoins. It's quite hard now to turn your money into a 20 or 30x. Okay, so your goal now is to learn as much as you can, try and make a bit of money, pull it out, and then buy in somewhere in the lows of end of 2026, okay, or early 2027 into Bitcoin, and then just ride the next bull market. Bull market goes up, bear market comes down. So what are we seeing right now? Why are the markets starting to feel a little bit more confident despite the fact that Bitcoin kind of continues to go sideways? Well, Bitcoin is still in a uptrend. Okay, we've been talking about this. We have had a couple of these little lows in here, but this is technically the uptrend. This is part of a ascending triangle. And right now, with Bitcoin refusing to break out of this, despite lots and lots of efforts, and despite the fact that the market feels very scary and worrying right now, Bitcoin is not breaking below here. If it does break down, which it obviously can, I expect it to put in another higher low. If it does that, that's incredibly bullish. Bitcoin will continue to march on. Why is Bitcoin marching on? Because we haven't had the news we want or whatever. Because it's fundamentally being driven by liquidity. And global liquidity right now, money in markets, is starting to increase. What's been slowing it down a bit is the fact that Donald Trump's out there trying to bang tariffs on everyone. Okay, when Donald Trump slowly starts to reduce the tariffs that he's putting on everyone because he's coming in very aggressively as a bargaining tool, okay, and then people are going to make deals with him because no one can afford not to make deals with the US because it's the world's largest economy and everyone relies on it from one point of view, whether you're selling stuff to the US or buying stuff from the US, whatever it is, okay, everyone needs to do business with the US. Donald Trump knows this. He's just bullying people into positions. Once he does that, he's going to try and bring down the value of the dollar. And he is already trying to bring down the value of the dollar. If the value of the dollar starts to fall, guess what? We end up with a very nice bull market. And this is the DXY. This is the value of the dollar. And guess what? Donald Trump went into office on the 20th of January. look, the dollar is slowly showing signs of weakness here after breaking up into this liquidity zone. Now, what lots of people will like to tell you is that when you break previous resistance and whatever else, that you are likely to just head higher. But in this situation, we are in a DXY downtrend. Okay, it comes up into the liquidity area before it starts to send itself lower. And this is very interesting because the dollar is weakening right now, and this is showing in other charts rather than Bitcoin. Crypto obviously still gets manipulated quite heavily, smaller asset class, but eventually it will follow on its way along with the other asset classes. This is gold versus the US dollar. Right now, gold, as I literally speak, is at all-time highs. This is the highest gold has ever been, okay? Gold is against the US dollar. It's a hedge against inflation. You can see it's surging towards the upside. Okay, yeah, maybe it was a little bit higher on the 11th of February, but that was just 3 days ago. It's pretty much there again. What else? Silver is up 3% today. These are bonkers numbers, okay? Silver, again, used as a hedge against inflation. You can see it's not at all-time highs, but it is coming up pretty aggressively from these lows. And when the liquidity in the world climbs, so does gold. Okay, when we see quantitative tightening, gold will also have pullbacks as well. This is on a monthly chart. You can see back in the end of 2022, gold puts in a low when, guess what? When Bitcoin puts in a low because of the FTX crash. No, the FTX crash is just a result of not only just sketchy, weird stuff that SBF and his weird-looking girlfriend were doing, but ultimately it's a result of the QT. Okay, the QT shows here in the gold charts. This is what caused the collapse in crypto. Those amplified the results of that collapse, but you see what's going on. So how else are we feeling the confidence returning into the market? Well, Bitcoin might be messing around, not doing much, but this is the total market cap, excluding Bitcoin and Ethereum. The altcoins saw some really nasty pain the other day on this dip, Monday the 3rd of February. And then since then, you can see continuing to build to strength. They've collected the liquidity beyond the support. Okay, so don't just rely on these support lines, and if the support line fails, then the price will just plummet. This is what people like to say. Okay, this went through the support line and it went into the demand zone. This is the demand. Up here is the supply. It's gone into demand. Now it's starting to push higher. We can also see this in USDT dominance. This was resistance. This is, guess what? The supply. This is the liquidity, comes up into supply. You can see it gets sold off very quickly and then it starts to come down. This is just a continuation pattern. Now, I talked about this just a few days ago in the video that I made, saying that altcoins were starting to show a little bit of confidence returning. And if we look across to this Bitcoin dominance chart on the monthly, you can see that the Bitcoin dominance has run into this resistance line. Now, it did it on a very interesting move, which happened just the other day off that tariff news that came out of the US. Now you can see that the massive spike towards the upside is usually a fairly solid top signal, obviously not guaranteed, compared with other ones that we've seen more recently. Now, with Bitcoin dominance taking a bit of a nosedive, at the same time that Bitcoin has not really been showing a huge amount of strength, and in fact is just going sideways, this is very key. Because typically when Bitcoin goes sideways or down, altcoins been bleeding very aggressively. But weirdly, you've seen Bitcoin started to build a little bit of kind of like sideways action here. And at the same time, Bitcoin dominance has been plummeting, which is why a lot of your altcoins haven't been performing that badly. And as I look across to the crypto bubbles right now, some altcoins today are up 13%. We've got XRP up 11% when Bitcoin's up like 0.5%. So this is showing a return in confidence to the market. And that's simply because the liquidity is slowly flooding into the space. And guess what? When the US comes up with an agreement eventually with China, they're going to say that we're going to weaken the dollar. Donald Trump doesn't need the Fed to be able to weaken the dollar. Right now, everyone's relying on what the Fed is saying with regards to interest rates. It doesn't really matter. If Donald Trump can weaken the dollar enough, then guess what? China, who are desperate to print money, will go out there and start printing money. They don't have the ability to drop interest rates because their interest rates are already really low. And they need to push their economy and strengthen their economy right now because of recent events with Evergrande and other economic problems in China. Their economy is struggling. They need to boost their economy as soon as possible. And Donald Trump wants them to boost their economy. Why? Because China buys a lot of the US debt. If China starts to do well as an economy, they're going to buy a lot of the US debt. US is therefore better off as well. Right now, we're seeing a bit of a push and shove around these tariffs and things like that. But we've seen the worst of the news from the tariffs come in because Donald Trump always comes in very strong and then he eases off. And that's why we're starting to see a bit more confidence returning to the markets. So where is Bitcoin headed from here? Who knows really, but I don't think we're going to go significantly lower than maybe these lows down here, which still sit around $92,000, $93,000. And more importantly, the altcoins are showing a lot of strength against Bitcoin. So remember this, whatever happens in the next day or two or the next week with your altcoins or your Bitcoin or whatever, doesn't really matter, okay? It might feel a bit painful if it goes down further. I get it. If you can, DCA in, but don't worry too much. That's obviously not financial advice, guys. Go away and do your own research. This is just what I would do, okay? But I'm not advising you to do this because I'm absolutely not qualified. All I'm saying is in the short term, we get ups and downs because of various news events or whatever, but they're just being used as a smoke screen by the market makers who want to move these markets to liquidate leverage longs. But really, the underlying thing that drives this market up and then will eventually drive it down is happening behind the scenes. And that's why we're seeing such a positive reaction in the Bitcoin price. We're seeing it in gold, we're seeing it in silver, we're seeing it in the drop in the dollar price, and lots of other things that drive us towards a major bull market. But remember, don't get caught in the trap and thinking that we're in a super cycle. This is not a super cycle. There will be a bear market. It will hit, and it will be very painful if you end up holding your bags through it. So don't do that. Do me a favor, if you enjoyed today's video, hit the like button. If you didn't enjoy it, hit the dislike button, because guess what? YouTube just likes interaction. It doesn't recognize whether it's positive or whether it's negative. Also, if you are new to the channel and you want to understand a little bit more about what's going on behind the scenes, to keep yourself calm and stop yourself panicking, and to know which altcoins to maybe be buying into, the ones that are at biggest discounts, then make sure you subscribe to the House of Crypto, notification bell turned on. At some point over this weekend, I'm going to tell you the altcoins, some of which are at 70, 80, maybe even 90% discount from recent highs that I think are going to recover to those all-time highs sooner rather than later. I'm going to tell you exactly what they are so that you can load up, and so that this time you can be buying into the bottom of coins rather than buying into the top. And then you can sit back and be looking at 5, 10, maybe even 20x gains in the coming weeks and months as that liquidity returns to the markets. Thanks for watching, guys. Have a great weekend. See you soon. Bye-bye.